Straight line depreciation method. Let's assume that a company bought a house for $2,200,000. The house will last for 20 years. This is what we call useful life. As years pass, the house gets older. It might break down at the end or need a lot of renovation. At the end of its life, the estimated value of such a house is called scrap value. Scrap value is also known as salvage value or terminal value. In our example, let's assume this is $200,000. Now, how are we going to distribute the cost of using the house? First of all, let's see how much our net pay is for this house. What is the net payment that the company paid to acquire this house for 20 years? Is it $2,200,000 or only $2 million? I think it is rational to say that the company had paid a net value of $2 million since it got $200,000 back after 20 years. Of course, we are ignoring the time value of money in this case. The net amount paid is what we call the depreciable amount, or the amount that is going to be depreciated. Now, how are we going to distribute the $2 million over 20 years? Since we are using the house the same way over its life, it's rational to distribute the expense of using it evenly. This means that an equal amount of the depreciable amount is allocated to each year. Now let's put that in a formula. We got the cost of the asset, then we subtract the salvage value to get the depreciable amount. Then we divide it by the useful life to get the annual depreciation expense of $100,000 per year. $100,000 is allocated to each year. Now let's look at the graph presentation. If we looked at the graph presentation, the x-axis represents the number of years and the y-axis represents the dollar amount. Each year, the depreciation expense is $100,000. If we added $100,000 for each year like that, what do we see when you connect the dots? A straight line. That is why it is called the straight line depreciation method. It is simple and easy to use, however, sometimes it won't be fair. Here is how. Let us assume that a company bought 3 buses each for $120,000. The salvage value is equal to $20,000. The useful life is 4 years. The company is going to use one bus to travel between Edmonton and Calgary. The second bus will be used to travel between Calgary and Vancouver. The third bus will be used to travel between Toronto and Mississauga. In year 1, the buses started traveling between the cities. As you notice, the distance that each bus travels varies significantly. In year 2, the Calgary-Vancouver bus starts deteriorating. In the third year, the Edmonton-Calgary bus started deteriorating as well, while the Calgary-Vancouver bus becomes even more deteriorated. In year 4, the Toronto-Mississauga bus starts to deteriorate. If we are using the straight line depreciation method each year for the 4 years, we will have an equal depreciation expense of $25,000 for each bus. Do you think that this is a fair distribution for the cost of using the buses? We have to link the depreciation with activity. This is what will be explained in the following method, units of activity method.